The definitive or the more definitive statement on March was obviously a surprise, certainly for the market. If you look at the intraday trading, the market actually took some encouragement from the statement itself, which was somewhat, clearly had a more dovish tilt than previous statements. But then during the press conference afterward, when Chair Powell was more definitive that March would not likely be on the table, market sold off, and we've seen the S&P down 1.6%. Our U.S. economists have overnight pushed back their expectation for the start also from March to May. We still expect 5 cuts, 4 successive cuts, and then 1 final cut in December. So the total quantum of cuts this year is the same, but given the guidance and so forth, we think the starting point will now be somewhat later. I think if I can just carry on just one moment, I think that the magnitude of the U.S. market sell-off, I think, is a reflection of perhaps 2 things. One, the S&P had done pretty well, but at that time it was up 3%, reaching several successive all-time highs just last week. So obviously expectations were building for more imminent confirmation of easing monetary policy. So I think that when that came out, then against that backdrop, then the market had to price that in. Looking just at the very early open for Asia this morning, I think particularly Korea, I saw it just turn green, and obviously it's just a couple of minutes of trading, but the key point here is that Korea being a very deep cyclical, you would expect to have an even more heightened reaction than the U.S. It hasn't. Why? I think because Asia somewhat pre-traded some of that. Korea was down 12% in dollar terms from the year-end close to the recent January low. Rebounded a little bit, but the key point here is I think that you've already gotten some of that uncertainty into share prices there. There's other reasons why we like Korea, but I think the somewhat more muted reaction of Asia at the open here, I think, is incrementally encouraging from an Asian equity perspective.
All right. One of the main reasons you like Korea right now is you think that earnings growth is probably going to be the strongest in this part of the world this year.
Oh, that's exactly right. So we think the investment case for Korea right now is actually really good, and it's probably our strongest and most out of consensus idea that we have. Okay. And this is something that we were mentioning during our macro conference in Hong Kong last week, which is our annual very large gathering of investors. And when we spoke about, obviously, China and Japan and India, those were well-desired topics of conversation. Korea was not picked up as strongly or much at all. So we think that the market attention is actually away from Korea, and we would encourage people to refocus on it for 2 key reasons. One, as I said, the market's down a lot, and we think it's got the strongest earnings recovery this year, driven by semiconductors. So we're looking for about 60% recovery in earnings after a very, very disappointing 2023.
What kind of earnings growth will that turn into?
60%, 60. Yeah. Now, I mean, that's a lot. The market, we think the earnings probably were down close to 40% last year, so it's just recovering.
It's a low bottom base.
So, yeah, exactly. It's a low base, but markets trade momentum, and we think there's some very strong momentum, which is already beginning to show up in some of the fourth quarter numbers, and will continue into the early part of this year. And then reason number 2, which is very fresh, which we just published on and getting a lot of incoming interest on, is that there's more momentum to the longer burning fuse of Korean corporate governance improvement, and that working to close the long-standing and well-understood Korean valuation discount versus Asian peers and global peers. And the key incremental story here is that Korea looks like it's following Japan's playbook of the TSE, Tokyo Stock Exchange, encouraging companies to improve their corporate governance and their returns in order to revalue themselves. Whereas in Korea, Korea now looks like it's beginning to emulate some of that, the so-called Value Up program, which has been announced. And given the fact that more than half the market trades below book value, there's an opportunity for some re-rating.